I like to talk about this topic because most people who are just starting to buy multifamily have usually owned some residential properties before they start purchasing, and they're just really nervous about all of the differences. I'm gonna start off by talking about the qualifying. Qualifying for a multifamily loan is different from residential in a lot of ways. We look at cash flow for qualifying instead of your personal income. We definitely look at what we call global cash flow, which is your personal cash flow as well, or your outside sources of income. But when it comes to qualifying for a loan amount, we do ask for tax returns and bank statements, which is standard in residential, but we're not looking through them with a fine-tooth comb the same way that you would in residential. We're not as tight about credit. In a residential loan, you might get a better rate if you have over a 720 or a 740 FICO score. With multifamily financing, generally, if you have about at least a 680 FICO, you just qualify to get the financing. If you have a little bit lower score, they're gonna take a look at why, and it's not really a hard and fast rule. The second thing that makes multifamily loans different from residential is that prepayment penalties are standard. Any multifamily loan you're gonna get is more than likely going to come with a prepayment penalty, which means if you pay off during that period of time, you are gonna pay some sort of a penalty, which the most common prepay is like a percentage of the loan balance at the time of payoff. The third thing is your loan to value. So in a residential loan, you might be able to just go in and say, I'm purchasing a property for this price, and I wanna put 25% down or 30% down, and you can go put that money down and get a loan. It does not work that way. Again, multifamily financing is all predicated based on the cash flow of the property. So even though our max LTV is 75%, sometimes 80%, it's really all about cash flow. The fourth thing that makes multifamily loans different is the closing costs. Closing costs for a multifamily loan are generally higher than a residential. One of the obvious reasons is just because you're dealing with larger loan amounts and larger properties. An appraisal costs more money. You might pay $500 to like $800 for an appraisal for a residential property. While in multifamily, pretty much a standard fee is somewhere between $2,500 to $3,500 depending on the size. The fifth thing would be locking your interest rate. You can rate lock with a multifamily loan, but you do so after you get what we call a letter of interest and you put in your deposit to move forward with ordering third-party reports. You then have the option to usually lock your interest rate from anywhere from 60 to 90 days. You do have to put up typically a 1% rate lock deposit. I say it's a deposit because once you get to closing, it is credited back to you. Item number 6 would be the fixed term. You might be thinking you want a 30-year fix because that's what you're used to getting on your residential properties. Primarily, you're looking at either adjustable rate or a 3, 5, 7, 10, and sometimes a 15-year fixed option. But there are many reasons why I would want to talk to you about why you would even want to go with a 10 or a 15-year fixed. So the next thing is the closing time frame. Sometimes when you're in a purchase situation where you had to take a 30-day close to be competitive, we might be able to close in 30 days, and we've definitely done it, so it's not unheard of. But the standard time frame that lenders need and like to quote is 45 to 60 days for closing, and that's industry standard, so it's generally not a problem. And last but not least is just really the disclosures and regulations. Commercial lenders are not regulated the same as a residential lender is. They don't have all the predatory lending, and the government is saying this is a business loan, you're a savvy business person, you understand what you're getting yourself into, so they don't have all those rules and those stops. I think that that's pretty much all the major things that make multifamily financing different from residential financing. Hi everyone, thanks for watching my channel. If you liked what you saw, please subscribe and also leave me comments. If there's anything that you want me to talk about, any questions that you have in regards to financing, property management, renovations, leave comments below and I would love to answer your questions. You can find me on my website at pacificshorecapital.com, and I'm also on Facebook and Instagram.